A day in the life of an accountant. What a topic. Hey guys, welcome to another video. This is the Financial Controller and my name is Bill Hanna, and I've been in the accounting game for the last 15 years. I've been a licensed CPA in the great state of New York for the last 5 years. And in my career, I started out as an auditor, and then I became an accountant, a senior, a manager, and now I'm a controller in a startup in New York City. And if you are new to this channel, what we do here is that I give you the lessons that I learned, the summary or the juice of the last 15 years, so that you can apply it to your own career and benefit from it. The topic of this video is a day in the life of an accountant. And what I'm going to do is, since there isn't an exact scenario or a template for a day, every day is kind of different from the day before. And so what I'm going to try to do is break this down to 3 sections. So we're going to look at daily, so the daily transactions or the daily tasks that I have to go through. And then we'll look at monthly, so there is a set of tasks or transactions that are monthly and the sort of the life cycle of an accountant. And then there is the seasonal aspect. So 3 things: daily, monthly, and seasonal. And the monthly, as you can imagine, is going to be things like closing the months, things that you have to do in terms of reporting and analysis on a monthly basis. And then seasonal, which is the last part of this video, is going to be things like, as you might have guessed, like taxes, auditors, or dealing with compliance issues in general. And then at the end of the video, I'm going to tell you the things that I enjoy the most about being an accountant and the tasks that I dread the most, or the things that I struggle to get up from bed in the morning on the days that I have to do. And so without further ado, let's jump right in. But before that, let's have some coffee. You'll need lots of coffee if you go into accounting. So we said we'll be looking at things in terms of daily tasks and then monthly and then seasonal. If we are starting off with the daily tasks, the things that I deal with on a daily basis are going to be broken down by 4 major things. One is accounts payable or payments to vendor, and then accounts receivable and collection from customers, and then payroll, and then lastly, employee expenses. And those are the 4 components that will make ultimately at the end the financial statements, right? So accounts payable and expenses are going to go on the income statement. AR and collection, that makes up revenue on top of the income statement. Payroll is one of the biggest expenses of a company in general, and then employee expenses. And what I mean by that is travel expenses and things that employees spend their money on and ask the company for reimbursement, such as phone bills, meals, and things like that. And so most days when I get into the office, I'm looking at accounts payable in terms of responding to inquiries from vendors on payments that they're sending us emails asking about the status of their payments, looking at an aging. And so the best way for me to know the status of accounts payable, how late are we on paying some vendors, or the status of it, is looking at the actual aging schedule, which gives me by vendor, looking at the buckets of 30 days, 60 days, and 90 days, understanding where we are with payments to vendors. And then secondly, I look at accounts receivable. And so I always look at an aging also. So looking at an aging will tell you past due customers and things that are late, understanding where you are with collection. That's really important as well. The third aspect of sort of the daily routine is going to be payroll. And payroll obviously isn't daily. So payroll is in the US is twice a month in most companies. Some companies pay weekly, but in most companies it's bi-weekly or twice a month. And so what I mean by payroll on a daily basis is that you are dealing with adjustments to the payroll. A new employee is starting, an employee is leaving, there is a bonus of some kind, and all of these things you need to be able to make sure it's in the payroll system so that it's processed on time, because obviously people are just super sensitive about their earnings. You got to make sure that's correct. And making sure that whatever you're inputting in the payroll system will then flow in correctly into your accounting financial package or software, whatever it is, QuickBooks or whatever you're using at your company. So payroll is another thing. Expense management, which is employee expense management. This is the expenses that employees are spending when they travel or if they are working remotely. It's going to be things like their phone bills, their internet bills, and things like that. And typically, people submit these expenses via expense management platforms like Expensify or Concur or any system like that. And in the back end, we are sitting as accountants reviewing these expenses, looking at the receipts, making sure that people are not spending more than they should. So typically there's a policy. So for example, the phone policy at my company is $75 a month for the cell phone if you are a salesperson. And if somebody's submitting a phone bill and asking for $85, right there. I'll catch it, and then I only pay him the $75. So this kind of thing is what I mean by expense management, is making sure that you're enforcing the policy on the back end and processing these payments on time. Again, people are super sensitive about their money. They want to get paid fast. And so you gotta, review it and make sure it makes sense. And then lastly, on a daily basis, of course, you're looking at the bank account. You're making sure you have enough cash to cover the things that you're paying. So if you're sending out a batch of payments to vendors, and my company, we pay on a weekly basis to vendors, so every Thursday of the week. And so I'm making sure that on that Thursday, if I'm sending out $500,000 in payments, that I have this much money in the bank, in the operating account or the spending account that I'm sending the money out of. And so monitoring cash is another daily component of my daily work. The same thing goes for payroll. So if you're on payroll day, I'm making sure that the payroll account has enough funding to match the payroll amounts. And so pretty much that covers the daily set of tasks that I have to do. And now we're moving on to the monthly cycle. And the monthly cycle is about closing the month. And this is basically spending the first or second week of the month, about maybe 10 days of each beginning of each month, closing out the previous month. And closing out the month means that you are doing the billing for the month, making sure you're invoicing all the customers and sending out those invoices. It also means that you're applying the cash that you received, all the cash you received throughout the month, to the open accounts receivable so that you can close that out. And that is the process of bank reconciliation. So a bank reconciliation is probably like one of the first things that I have to do at the beginning of each month, is to reconcile the bank for the month before. Reconciling the bank will ensure two things. One, making sure the cash payment from customers will close out open invoices so that I know that my accounts receivable balance is correct on the balance sheet. Secondly, when I reconcile the bank statement, it means that I'm accounting for all the expenses. And so when you know that the bank balance on the bank statement and on the books agree, you know that you captured all the cash receipts and the cash expenditures. And that's really important, and that's usually one of the first things that I have to do at the beginning of the month. So we said billing, bank reconciliation, and then accrual for expenses. So basically, when you're accounting for expenses, you already received a big chunk of invoices from vendors, and those are your expenses. But then there are those expenses that you haven't received an invoice for. And so usually I have a list of things or vendors that I know are late in sending their invoices, and I need to accrue for these expenses. And then there are other things that will go in there, such as payroll. So I'm making sure payroll is correctly booked and accrued. If there is any things related to payroll that need to be accrued, such as severance or a bonus that hasn't been paid out yet, but I know that belongs to the month, or a commission, for example, even if the commission or the bonus hasn't been paid yet, you need to accrue for it. And so accruals are really crucial piece of the monthly closing cycle. And then once all of these things are complete, then I can go ahead and generate financial statements. Once I have the financial statements, the first thing I do is compare period over period. And so I'm looking at the month, for example, if I'm closing the month of May, I'm looking at April. Sometimes I go back to March, kind of look month over month and see the fluctuation by account. And that will give me sometimes hints into what's missing. I could see a balance of one account suddenly dropping or having a big spike. And then I realize that something maybe needs to be adjusted. So that's the first thing, is reviewing period over period. And then secondly, and very important, is comparing the actual results of the income statement and the balance sheet to the budget. So what I do is I look at the month itself in terms of performance in the income statement compared to the budget, and then provide commentary on the difference. If we budgeted for a certain expense $50,000 and we spend $60,000, that's $10,000 over. I have to figure out what's that difference, or $10,000, and provide commentary on it. And once I have all of that complete, I can go ahead and look at my KPIs. And so KPI is another crucial area in my monthly cycle, which is things like gross margin, DSO, or days sales outstanding. And KPIs are just like really quick measurements or metrics to measure the performance of the business. And so gross margin, if your gross margin in whatever industry you're in is 25% or 30%, when you look at that, you can immediately judge the efficiency of the business without going into the actual cost of goods and the sales numbers. So KPIs are really crucial to the monthly cycle. And I actually have a full online class in KPIs where I teach you how to design KPIs to measure any business with real-life examples. I'm going to leave a link to that down in the description below if you're interested to take a look at that. And so we talked about the daily set of tasks, and then we talked about the monthly cycle. Now we will talk about the seasonal cycle, which has to do with tax preparation and the audit. Now with tax preparation, usually what companies do is they outsource that to an outside firm, but you as an accountant, or in this case me, what I do is I generate reports at the beginning of each year for the prior year and give it to the tax accountants. And so these reports are going to be things like sales by state, employee payroll by state, rent by state, and these are important in determining your tax liability in each state in what we refer to as nexus. And so if you have certain sales that trigger a nexus in a certain state, that means you have to file a tax return there. And once I have these reports over to the auditors, they ask for the finalized or the semi-finalized set of financial statements for the year, and they use that to determine your tax liability when they file the extensions. And usually you file an extension on April 15, and then you file the actual tax return in October 15. I'm talking about obviously the United States. Other countries have different deadlines. And the other component to tax return is going to be the filing of the actual tax return on October 15. And so once we are getting close to October 15, we've already finalized the financial statements for the prior year, and we usually send the set of financials to the tax accountants by the end of September or so. They will use that to file or prepare the final tax return, which we will then sign off on and then file with the IRS and then each individual state that we have to file in. Now, the other big part of the seasonal type work is the audit. And so the audit is a major component of the life of an accountant. Usually when you work for a company, the company goes through an annual audit by an external auditor that comes in, looks at the books and records, and issues an opinion that will say that whether the financial statements represent fairly the financial or the economical condition of the company. And so basically that audit has to do with the auditor going through your financial statements and then asking for support for items on the financial statements, and then they can issue an opinion. And so basically it begins with a list of items. So the auditor usually comes in around February or March to begin examining the prior year. They ask for a set of reports, and then we go ahead and provide these reports to them. They make selections based on materiality and based on other audit methodology, and send us the list of items that they are selecting and want a support for. So for example, for payroll, if they select certain items on payroll, the support will be the payroll register. If it's a vendor expense, then the support will be the actual invoice from the vendor, and so on and so forth. And so that's the audit, and that's the other piece of the seasonal type work that I have to do. And as I mentioned at the beginning of the video, I'm going to tell you the things that I enjoy the most about being an accountant, as well as the things that I dread and just find it really hard to wake up in the morning on the days that I have to do. So let's begin with the things that I like. And the things that I like the most are going to be more strategic in nature, and that's one of the things we talked about in the monthly cycle of the work is the KPI measurement. And so the KPI measurement was making sure that the business is performing as you expect it to perform. And these are things like measuring the gross margin, the cost of customer acquisition, days sales outstanding, and things like that. I enjoy that a lot, as well as analyzing the financial statements and comparing actual performance to budgets, or comparing the period to prior periods and finding where we are performing well and where we're not performing well, and providing commentary on that. And then the things that I dislike the most are going to be the things that are related to taxes and audits. And the reason is, for taxes, I don't have a strong enough background to understand it. And for me, when it's something that I don't really understand or get that well, I struggle with, and I fear it, and then I end up disliking it. With an audit, I understand audit. I came up from an audit background, so I know audit very well. I'm, tailoring an audit program and the methodology, so I understand it. That's not why I dislike it. I really get it. It's just that an audit is really intrusive, and it comes in. The auditors usually come in and ask for so many questions on support and things that they need for the audit, and that's why I dislike it. And so I hope you enjoyed this video, and I hope that you learned something from it. I hope it helps you if you're, for example, deciding on a major in college, whether you should major in accounting or not. I hope this gave you sort of an idea on what I have to do. Now I'm speaking from a controller perspective. That's what I do today. But in my journey to becoming a controller, I've worked as a staff accountant and a senior and all of the other positions. And so I've done all of these things that I talked about today. And I hope that you understand now the things that I enjoy and the things that I dislike. And that gives you an idea as well about the work. And if this video was helpful, please consider sharing it with someone else that might benefit from it. And if you haven't subscribed already to the channel, please subscribe so that you don't miss out on any of the videos that I put out weekly. And I'll see you in the next one.